Johnson & Johnson is a broadly based healthcare company, one that's in a truly unique position to capture and develop opportunities that will help people around the world. In 2010, it was ranked number 2 by Barron's Magazine as the world's most respected company, and it was also ranked number 2 by Diversity Inc. magazine in 2010 as well. Johnson & Johnson's success is derived from both a product and operational faculty. It has created a level of exposure through its brand ownership that has dominated not only the domestic market, but also the consumer marketplace on a global scale. Johnson & Johnson's market is highly competitive, and so research and development teams at Johnson & Johnson need to be focused on ensuring that they are the first to market cheaper generic alternatives to secure the highest market position. Johnson & Johnson also recognizes the importance of diversification as a key to success and longevity within its industry. Although standard developments in commercial and medical areas are important, the company has adopted heavy investment for biotech ventures, surgical products, and internet publishing. This will create a secure market presence in fields such as surgery and research and development. Apart from working on external markets, Johnson & Johnson has retained sales participation and profit through their extensive work on external operations. An example of this would be their involvement in ecological issues through downgrading to sustainable and recyclable materials and through investment in repackaging and waste management. This helps them to ensure competitive market prices where necessary. Also, the removal of manual task time, the introduction of systematic analysis, and other further operational changes to finance systems has enabled better productivity, which has resulted in improved profit levels for Johnson & Johnson. Johnson & Johnson's strengths lie in its strong in-house research capabilities, their widespread geographic presence, and increasing consumer and MDD product sales. Johnson & Johnson's weaknesses are product recalls, patent expirations, and their underperforming pharmaceutical segments. The opportunities that Johnson & Johnson has are in their strategic acquisitions, new products in their pipelines, their global pharmaceutical market, growth in the prevalence of cancer, changing demographics, and emerging markets. Johnson & Johnson threats are litigation and legal claims, regulatory requirements, competitive pressures, and increased pricing control.
Johnson & Johnson has a long history of financial success, and as a result has grown to become one of the most financially stable companies in the world. Sales in 2010 totaled just under $62 billion. This was only a 0.5% decrease from 2009. Sales in 2010 were split between U.S. and international, as they totaled nearly $30 billion between each. U.S. sales decreased over the past 3 years, while international sales increased in 2010. A negative impact on currency has been one of the major factors in the decrease in sales over the past 2 years. This is a factor uncontrolled by the company, which speaks good for the future of Johnson & Johnson. Sales at Johnson & Johnson are very diverse. Over the past several years, they have not had one customer that has accounted for more than 10% of their sales. They divide their financials into 3 major segments: consumer, pharmaceutical, medical devices, and diagnostics. Both the consumer and pharmaceutical segment sales decreased, while the medical sales and diagnostics increased 1.9% from the previous year. These segments are further divided into subsegments, which each had varying performance from the years previous. As with any company, there were numerous factors which affected these segments individually, many of them uncontrollable by Johnson & Johnson. Stock performance was strong in 2010, as the year-end close price was nearly $62, with prices reaching nearly $66 during the year. And once again, a dividend payment was increased. Johnson & Johnson has maintained financial success despite global economic struggles. The diversity of Johnson & Johnson industry should help it maintain financial stability in spite of economic or political hurdles that may present themselves in the future.
Johnson & Johnson's current quick and cash ratios are higher than industry average, which shows good short-term financial strength. Johnson & Johnson's inventory turnover ratio is higher than industry average, which shows good sales and is considered positive. Johnson & Johnson's earning per share ratio is much higher than industry average, which indicates that Johnson & Johnson is a good investment. Earning per share ratio is a profitability and market ratio used in valuation of a stock, and higher the ratio means investors are expecting higher earnings growth in the future. Johnson & Johnson's debt per equity ratio is lower than industry average, which indicates Johnson & Johnson is not using aggressive strategies. Johnson & Johnson's return on sales ratio is higher than industry average, which indicates that the company is growing more efficiently. Johnson & Johnson's return on assets ratio is higher than industry average, which indicates company's efficient management. Johnson & Johnson's return on equity ratio is slightly lower than industry average, which indicates less profit for money invested by shareholders.
Johnson & Johnson's research and development is an area that could be improved upon in relation to some of its closer competitors. The percent of annual sales spent on research and development by Johnson & Johnson was 15% less than two of its closer competitors, Merck and Pfizer. Brand name is a competitive advantage because the company has been in business for 125 years. The brand name is trusted and valued. Even recent recalls have been because products did not meet Johnson & Johnson's own quality standards. Product diversification is a strong area for Johnson & Johnson with many different products and product lines. The extended product lines provide value by increasing the customer base for the company. In regards to liquidity and capital resources, the company anticipates that operating cash flows, existing credit facilities, and access to the commercial paper markets will provide sufficient resources to fund operating needs in 2011.
Gorter's Five Forces framework allows Johnson & Johnson to view and analyze not only their customers, but as well suppliers and competitors. By looking at this exhibit, you're able to view a synopsis of where Johnson & Johnson stands in their industry. Johnson & Johnson has been able to build a strong relationship with their suppliers throughout the years, and this gives them a competitive edge. As stated earlier, Johnson & Johnson has built customer value, and even though there are other substitutes in their industry, their customers show brand loyalty. Buyers do not possess too much bargaining power due to the low cost of their products. Johnson & Johnson has positioned themselves in this industry as one of the leaders, and for new entrants it would be challenging to gain distribution. Strategically, Johnson & Johnson patent their products, which causes less of a threat from their competitors.
Johnson & Johnson has diversified product lines across medical devices, consumer products, and pharmaceuticals. It has one very important strategic goal in its business strategy, and it is to participate in growth areas in human healthcare and attain leadership positions through high-quality, innovative products and services. Businesses are managed for the long term as a source of value to its shareholders. It is also expanding its core businesses to emerging markets like Brazil, Russia, India, and China. Another way to achieve their goal is through its recent acquisition of wellness and prevention business. It is a web-based digital health coach that emulates a live health counselor over the web, addressing issues in weight and stress management, smoking cessation, chronic condition management, just to name a few. Results have been measurable and has led to a reduction in medical costs, and employers that have participated in this program can see cost savings as well as increased productivity and performance. They continue their strategic framework by expanding their consumer segment and adding an array of cleansers, moisturizers, and shaving products exclusively for men. This was a wise decision in order to increase its competitive edge in the consumer segment. Furthermore, it holds 10 U.S. patents in the cytomimic technology to help rejuvenate and maintain healthy-looking skin due to fine lines and wrinkles, loss of firmness, and sagging skin. Its medical device and diagnostic addresses health concerns like diabetes, which is a major public health concern in the U.S. because of its prevalence, morbidity, and mortality, as well as economic burden. And its pharmaceuticals research and development addresses growing health concerns like bipolar, schizophrenia, breast cancer, arthritis, and so on. It is the strongest segment, generating long-term profits and shareholder value. Short-term strategy due to recent events involving recalls, allegations of kickbacks, and bribe has prompted Johnson & Johnson to quickly address the issue and fully cooperate with all agencies and recall all items in question. Through its transparency, accountability, and organizational restructuring, Johnson & Johnson will restore its reputation and consumer confidence. Because market share depends on how quickly new and better products are put on the market, it is clear why Johnson & Johnson is comprised of 42% pharmaceuticals, 41% medical devices, and 17% consumer products. However, decreased sales in its consumer segment due to over-the-counter recalls of their most recognized brands of medications and other allegations has prompted Johnson & Johnson to restructure its consumer segment. Its new organizational restructuring now consists of 4 new consumer categories: skincare for babies and adults, over-the-counter medicines, oral care and topical health, and women's intimate health. Each category will conduct research and development along with other functions. The organizational change will give Johnson & Johnson a focus to quality and compliance and the critical task of restoring the reputation of its product and consumer confidence. Thank you.
J&J agreed to pay recently a $21.4 million fine to settle Justice Department criminal charges and pay more than $48.6 million in disgorgement and interest to settle allegations made by the Securities and Exchange Commission. The allegations date back to 1998 and involved sham contracts, bribes, kickbacks paid by J&J units to officials and doctors in Greece, Iraq, Poland, and Romania to help earn millions of dollars in profits. Authorities accused J&J units of paying bribes to public doctors in Greece to select its surgical implants and in Romania to prescribe its medicines, earning the company millions of dollars. These surgical bribes were also initiated here in the U.S. by DePuy Orthopedics, a J&J subsidiary. J&J will be entering a 3-year deferred prosecution agreement with the Justice Department. With kickback allegations and recent medical device recalls leading to class action lawsuits, J&J is currently facing a PR nightmare. At this point, J&J's best recommendation is exactly what the company is starting to do, and that's to cooperate. By entering into a deferred prosecution agreement with the DOJ and a consent to final judgment with the SEC, J&J will initiate their cooperation with these investigations, and they will remain compliant through them. As far as the medical device recalls, J&J has offered up to 100% financial assistance to all patients who have been recommended by their orthopedic surgeon in need of revision surgery. This offer will obviously not eliminate patient lawsuits, but is seen as a necessary act of corporate responsibility. J&J will be spending a lot of money for the years to come in dealing with these legal issues, but we believe through corporate responsibility, eliminating all internal corrupt employees, and a strong PR campaign, that these will be the key objectives in ensuring the global community that something like this will never be allowed to happen again.
Johnson & Johnson is a healthcare company for consumer, pharmaceutical, and medical device and diagnostic markets. They have created a high level of exposure through their brand ownership, and they have dominated the consumer marketplace globally. Johnson & Johnson has a long history of financial success and has shown economic success through recent global economic struggles. Stock performance was strong in 2010 as the year-end closed with increased dividends and earnings per share. The diversity of J&J's industry should help to maintain financial stability in spite of economic or political hurdles that may present itself. Product diversification, research and development, and their brand name continue to create value for Johnson & Johnson. We recommend that they should focus more on research and development as they dedicate less than 2% of their sales towards it. In light of recent allegations against Johnson & Johnson and the settlement with the Justice Department and the Securities and Exchange Commission, our best strategic recommendation to Johnson & Johnson is to continue to cooperate and remain compliant during the investigations, take corporate responsibility, and execute a strong PR campaign to offset the negative publicity. In addition, they should continue to provide financial assistance to all patients who require additional treatment due to medical device recalls. Johnson & Johnson has been able to be market leaders in their industry by creating value. Johnson & Johnson continues its strategy to meet the needs in healthcare and expand its core businesses by investing in emerging markets. They continue to have a strong R&D presence and scientific innovations globally. Johnson & Johnson continues to be focused on bringing innovative, accessible, and cost-effective products to its customers.